Sir, in another 1 minute, I am starting the session, sir.
Yes.
So, welcome to the seminar on the Companies Act, virtual CPE meeting on the Companies Act. I request, because as replied to you yesterday regarding these public limited companies, most of them are misunderstood that 16, 17, 18 of this month, but this is 16, 17, 18 of next month, that is December, because the branch has been preoccupied in the November for the GST seminars and after that tax audit seminars. And there have been instructions from the SIRC saying that from the 1st to 13th, we should not, branch should not conduct any of the programs. So we are done away with those dates. And now that remaining days will be only after 15th. Extremely sorry. Also, after 15th, we have planned that 16, 17, 18 of the December will be the public limited companies, and the same will be taken up by sir. That is in continuation with the private limited companies. So, without wasting much of your time, and just it is also reminding you tomorrow there is going to be one more bonus session for you, and that will be from 6 to 8 only. Regarding the time, some of the members have given their concerns, but it is the time that is suited to everyone. So we stuck to that time. Thank you very much for understanding us. And without wasting much of our time, I am just handing over the proceeding to Jayaraman sir. Sir, it is over to you.
Very good evening, my dear chartered accountants, respected chairman of Vijayawada branch. We had a very extensive discussion yesterday, particularly with reference to section 185 and 186. 185, as I told you, is basically a prohibitory section. Certain companies, certain people cannot receive any, cannot give any loans. Rather, the company cannot give any loans to certain persons and all that. Then 186, we had an extensive discussion on procedure. While they have simplified, or they have extensively allowed more loans, guarantees, and securities in terms of 60%, 100%, hell a lot of procedures have been put, which we saw yesterday. We will now start with related party transactions, section 188, very important section. At the outset, let me tell you and confirm once again, related party transactions very much applies to private companies, no exemption whatsoever. Right. For proper understanding of the section related party transactions, I would like to divide the section into 5 or 6 parts. 1. Who is a related party? 2. What are all the related party transactions? 3. What approvals are required? 4. What other procedural compliances we must do? 5. What are all the exemptions given under this section? 6. What are those terrible penalties for violation of this section? If we divide the section into these 6 parts, it will enable us to properly understand the section and finish off at the earliest. First, I will look into who are the related parties. In section 2, within bracket 76, he has defined who is a related party. Now we'll do one thing. Here also there is a very big list. Now yesterday, if you remember, I gave the list of 185, that 4 points. We'll keep this as a base and make some addition. Sorry. We'll keep this as a base and make some additions and deletions, we will get the list of section 188. Now, please recollect, in 185, I told you, loans, guarantees, and securities to director of the lending company or its holding company, relative of such a director. Almost the same here, but one change what they have made, KMP is also added along with the director. You know, key managerial person means, obviously, it means the managing director, whole-time director, manager as defined in the Companies Act, then CEO, CFO, and company secretary, all this are related, are KMP, key managerial person. So let's break up into 8 points. First 4 is related to the company. Next 4 is related to holding company. Look at it, director of the company. So company enters into any contract for sale, purchase, and supply of goods, materials, related party transaction. And in 188, one important point we must understand, whether you actually make profit or not in the transaction, the law starts with the presumption you are making the profit. That's the presumption which they start, and various approvals are required to be taken. Similarly, relative of the director, we saw the big list of relatives of each director. Then KMP of the company, so related party transaction by the company with the KMP, with the company secretary, with the CFO, with the CEO, and relative of the KMP. So that is how the list comes. Then the holding company, director of the holding company, relative of the director of the holding company, KMP of the holding company, relative of the KMP of the holding company. If you combine all these points in a simple single sentence, it means related party transaction entered with the director or KMP or their relative of the company or its holding company. So if you break up, you'll get this list of 8 people. Then let's go back there. And then partner of such director is not here. Then the firm in which director or relative is a partner. Now here manager is added. Manager means I've been telling again and again, not your purchase manager, marketing manager, or sales manager. Today we'll discuss manager as defined in the Companies Act. So contract with a firm in which the director or manager or relative of the director or relative of the manager is a partner. Then private company. Then we saw in that list, loans, guarantees, securities, special resolution is required in case the contract is entered with the private company in which such a director is a director or member. I said relative is not there. Here he has added the relative, the terrible paralysis. Contract with the private company in which such director, in contract with a private company in which such a director or relative is a director or member. So if you draw this list, so relative also, not only the director, his relative or manager, their relative is a director or member. See the wide list which they have got. So contract with the private company, its director is a director or member, manager is a director or member, or a relative of the director or manager is a member or director. Related party transactions. Then next one. Contract with the body corporate, that is not there. Here contract with the public company in which the director is a director and holds 2% or more of the paid-up capital along with the relatives. Nagarjuna Fertilizers Chemicals Limited enters into contract with Reliance Industries Limited for sale, purchase and supply of goods material like that, in which the director is also a director there. Fair enough. You are a director in both these public companies, and not only that, and this director together with the relatives is holding 2% or more than 2%, not 2% or more. Fair enough. Related party transaction. I'm a director here and there, plus I and my relatives are holding more than 2% of the shares. Similarly, the second one is contract with a public company in which the manager of this company, manager and his relatives, manager is also a director there, and his relatives, they are holding more than 2% of the shares. And the next one, the other point I told you, body corporate in this board MD manager accustomed to act. Hey, I told you yesterday, in Reliance Group, let's say there are about 86 companies plus, and Reliance Industries Limited, the flagship company, enters into any contract for the sale, purchase, and supply of goods, material, services with any of those 86 companies. It can be brought under the purview of related party transaction, because yesterday I explained very much in detail, because all this managing director, board, manager of all these 85 companies are accustomed to act in accordance with the directions and instructions of board or director of the lending company, that is Mukesh Ambani. Then person on whose advice, direction, instruction, director, manager is accustomed to act. The difference between these two is, in the earlier case, Reliance Industries is entering into contract with Reliance Real Estate Private Limited. In the subsequent case, Mukesh Ambani is entering into contract. He may not be a director. So this company, director, manager and all, is simply accustomed to act in accordance with the directions and instructions of one person, that is Mukesh Ambani. Look at this vast parameters of list who are all related party. Of course, nothing will apply if you give any direction or instruction, the professional capacity. So, internal auditor, statutory auditor, practicing company secretary, those people can give directions. Now, they have made a lot of amendments. The story doesn't end there. Contract between the holding company and subsidiary company is deemed to be related party transaction. Earlier, there was some doubt. Sir, if the holding company is a foreign company, if the subsidiary company is a foreign company, will it attract? Now they have used the word body corporate. They did not use the word company. So the holding company or subsidiary company, even if it's a body incorporated outside India, they enter into contract in India. It is a related party transaction. So contract with the body corporate, which is its holding company. So body corporate, which is the holding company, it may be a foreign company, doesn't matter. And with the associate company or body corporate, it's a subsidiary, which is also fellow subsidiary. I told you. So that's A is a subsidiary of B, B is to C. A to C also is a related party transaction, or with any body corporate, which is an investment company. This is the list of related party transactions. Now, let's look into what approvals are required. What are related party transactions? I'll come to that slightly later. What approvals are required? All cases of related party transaction has to go to the board, meeting of the board. Even if the value is 10 rupees, 20 rupees, it has to go to the board. No inner exemption of 5,000 rupees, 10,000 rupees, something like that. So you sell the goods to a director. You sell the goods to a director, related party transaction. What is the value? 25 rupees. Go to the board. And wherever you are constituted audit committee approval is required. Of course, in private company, you don't have audit committee, but in any case, if you are constituted, their approval is required, even arm's length cases. Then third point is, if the value of the related party transaction is more than a particular limit. What is that limit? We'll discuss. If it exceeds that limit, then prior approval by ordinary resolution is also required. In loan visa, up to 60% board approval, more than that, special resolution. Here, more than those limits, ordinary resolution is required to be passed. Now we have finished who is a related party, what approvals are required. Now, what is related party transactions? Look at this slide. Now, a lot of changes have taken place in the last 1 year in the figures. First, let us look at the left-hand side. What are all related party transactions? Sale, purchase, supply of goods, materials directly or through agents. Company enters into contract for the sale of goods with a director, with a KMP, with a firm, with a private company. Company enters into contract for disposal of property. Company enters into contract for lease, availing of services, appointment of office to hold office or place of profit, underwriting contracts. Now, let's start one by one. The first one, sale, purchase or supply, goods, materials directly or through agents. We are talking of goods other than immovable property. We are purchasing the goods or selling the goods. See, as I told you in section 188 in related party transactions, the logic is very simple. He is a director of the company. He is also a partner in the firm. And the company is entering into contract with the firm. And the director is in close proximity with the management. Rather, he himself constitutes the management. So the law presumes that he is an interested party and he is making profit in the contract. Whether he makes the profit or not, the law starts with the presumption. So the law says, hey, let the matter go to the board. Don't give the power to the officers of the company. They may misuse. They may simply listen to the director. Put up to the board, meeting of the board, and let them discuss the pros and cons and award the contract. If the contract is in the best interest of the company, otherwise they will avoid the contract. That's the idea. And please see, what is the value of the contract? Not just 1 lakh or 2 lakhs. Last year, 10% of the turnover. Last year, turnover was, say, 50 crores. And now this value of the contract is 6 crores, 7 crores. Come on, shareholders' approval also is required. So in the right-hand side, the figures are changed. Earlier, it was 10% or 100 crores, whichever is less, all that they have removed, 10% of turnover. Now come back. Selling and disposing of the property, all immovable properties directly or through agent. So it has to go to board. And if the value of the property exceeds last year 10% of net worth, ordinary resolution. Leasing of any property. For example, leasing includes all your rentals and all that. The director is the owner of the building. And I have given this building on lease to the company for use them for accommodation purposes, related party transaction. And if the rent exceeds 10% of turnover, then ordinary resolution. Availing of services, different services, any kind of commercial services, related party transaction. Then holding office or place of profit, I'll come to that. So if you are holding office or place of profit and you are getting a salary up to 2,50,000 per month, only board approval. More than 2,50,000 per month, ordinary resolution also required. Then this company enters into contract with all this related party in respect of underwriting the subscription of securities or derivatives, underwriting, then up to 1%, only board approval. More than that, come on, more than 1%, ordinary resolution in the general meeting. So we have now finished who is the related party, what are all the related party transactions, what approvals are required. Within those limits, only board approval. More than those limits, ordinary resolution in general meeting is also required. Now, let me discuss some specific issues. The word goods includes all capital goods also, other than immovable property. Then property means, don't say only immovable property like land, buildings, plant and machinery and all. It also includes intellectual property rights like patent, trademark, software, copyrights, brands, all that is included. A director sells his own software to the company, related party transaction, it has to go to the board. Then leasing includes franchise also. Not only rental agreements, franchise. Now, suppose you take the case of Godrej. They manufacture this soft drink Fruity. You mean to say the Fruity is manufactured everything in Bombay, Villaparle and distributed? No. They got a lot of franchise units given to the outsiders, about 35 franchise units. Bottling plants are there. So if any of these franchise units are given to the relatives of the director or someone who becomes a related party, come on, board approval. Then services. What are all the services? Commercial and professional services. So it could be insurance, banking, software services, all services. But we saw a clarification in the earlier Companies Act 297. Professional services are out of the purview. So there is no reason why you should not extend this to this also. So the first 4 things are simple to understand. Now the issue arises, how do you calculate this 10% of turnover or net worth? It is with reference to the preceding financial year. Though you have used the word audited, it doesn't really matter. Suppose you are calculating the month of April or May, last year audited figures may not be available. You can still take the 31st March figures and go ahead. Now there is one problem. Now please see. How do you calculate those limits? The limits apply for transactions entered either individually or taken together. This means all transactions put together for a particular nature should be taken into account. Also, the limits for each related party. I'll try to explain this. Please look at the slide. Now, let us say the company enters into transaction with all these persons, Director 1, Director 2, Director 3. Firm 1, Firm 2, Firm 3, private company 1, 2, 3, body corporate 1, 2, 3. They are all, let us say, related party. My first doubt. There are 6 separate transactions, isn't it? One is goods, then transaction of property, then leasing, 4th one services, 5th one holding office or place of profit, 6th one underwriting. Now my question is, the 10% of turnover, is it with reference to all the 6 transactions put together? No. So first point is very clear. First point is 1 to 6 categories are separate limit. For example, if the company enters into contract with the Director 1 for sale of goods more than 10%, then only ordinary resolution. Now again, the company enters into contract with the D1 for supply of property are separate limited, 10% of turnover. Similarly, for services, again 10% of turnover. Is that clear? So for each category, separate limits are given. No mixing up. First point very clear. Now let's come to the first category. Now, the company enters into contract with Director 1 for supply of goods, the first category. Similarly, Director 2, supply of goods, Director 3, supply of goods, Firm 1, like that. Now my point is, if it exceeds the 10% of turnover, ordinary resolution is required. For the purpose of calculation, will you take all the related parties together and calculate the 10%? No. So company and Director 1 separately will calculate. If it exceeds 10%, then only ordinary resolution. Company and Director 2, if it exceeds 10%, then only ordinary resolution. So the second point is very clear. Company to Director 1, company to Director 2, each related party, separate limits. Third issue. Now, let's come to company and Director 1, the first category, supply of goods. Somewhere in the transaction held in the month of April, let us say the amount was about 5 lakhs. It is well within the 10%, so board approval. Then the month of June, another 25 lakhs. Will it treat all separate transactions? No. With one particular party, it will be cumulative transactions for the whole financial year. That means with the company and Director 1, cumulative limits for all the transactions put together in that first category. Now look at a situation. Sometime the company and Director 1, the transaction in the month of January, it has exceeded the 10% limits. So board plus ordinary resolution. In the month of February, the transaction value may be just 1 lakh. Because it is cumulative transaction, once you are taken ordinary approval, further transaction, again ordinary resolution approval will come. So this is how you have to understand. You have to maintain a register and understand this. So in the register, what you do, this sale of goods, sale and purchase of property, Then leasing transactions, supply of services, separate limits, you keep it. Then come for each category. In each category, separate limits for each related party. Then, of course, separate category, separate limits for each related party, but transactions during the financial year, you must take it cumulative. So these are the points you must have a look at it. Now, holding office or place of profit. Well, how do you define holding of office or place of profit in the company or subsidiary or associate company? Now, this definition will divide into two parts. Director holding office or place of profit, separate definition. The other people, relative, private company, public company, body corporate, holding office or place of profit, separate definition. Right. A director is said to be holding office or place of profit under the company or subsidiary if he receives anything from the company over and above the remuneration which is entitled as a director, whether a salary, fees, commission and all. The other persons is said to be holding office or place of profit if they receive anything from the company by way of remuneration. Type of remuneration is material. You pay a salary, fees, commission, perquisites, rent-free accommodation or otherwise. Now let's start from the beginning. A director, when he is said to be holding office or place of profit, now an ordinary director under the Companies Act, he gets some payments. What are all the payments? Sitting fees, expense reimbursement, commission on profits 1%, 3% and all. They are all paid under the Companies Act. So payment of this will not be said to be holding office or place of profit. If you pay 1 rupee extra, then he is said to be holding office or place of profit. Similarly, managing director of the company, let us say it's a profit-making company, he will get 5%, 10% commission on profits. Fair enough. Right. If it if it's a loss-making company, Schedule 5 payments you get. Now, whatever these payments are made, they are paid under the Companies Act. So for this payment, no holding office or place of profit. If you pay anything extra, then it is said to be holding office or place of profit. Right. Then the other point you find is, so from this, what do you understand? The type of office which the director and other people hold is immaterial, whether temporary or permanent, whether he's given a room or not, whether he's given a power or not. Then what is the deciding factor? Remuneration. So if you don't pay anything extra to the director, this section will not apply. Even though the stupid fellow works from morning to evening, he doesn't get any extra payment, he is not said to be holding office or place of profit. So the definition of office or place of profit is defined from the angle of whatever remuneration we receive. From the angle of payment. Now, what about those relative, firm, private company, public company, body corporate, holding office or place of profit? If they receive any payment from the company, whether a salary, commission, perquisites, he is said to be holding office or place of profit. And one more thing, holding office or place of profit under the company or under the subsidiary company. Now, let me take some issues and explain. Let me take some issues and explain. First, I am a director of Nagarjuna Fertilizer. I am a director of Nagarjuna Fertilizer. As a director, I'll get sitting fees, expense reimbursements, and other payments. I'm not holding any office or place of profit. I am a director of Nagarjuna Fertilizer. I am also appointed as financial consultant to Nagarjuna Fertilizer on a salary of 1 lakh per month. I'm holding office or place of profit. I'm getting more above payment. Then what approvals? Board approval is required. Second, I am a director in NFCL. I am appointed as financial consultant in NFCL on a salary of 3 lakhs per month. Board audit committee plus ordinary resolution because it exceeds 2,50,000. Next, I am a director in NFCL. My son is appointed in NFCL on a salary of just 5,000 per month. What approvals? Board plus board approval required audit committee. Hey, listen, whether it is a private company or public company, any director's son, daughter, wife, they are appointed and you are paid something. Holding officer pays a profit, related party transaction. None of them are following all this. You can't recruit your own people without board approvals. Third, I am a director in Nagarjuna Fertilizer. My son is appointed as financial consultant in Nagarjuna Fertilizer on a salary of 3 lakhs per month, board plus audit committee plus ordinary resolution. I and my relatives and all that. Next, I am a director in Nagarjuna Fertilizer. I am appointed as financial consultant in Nagarjuna Agri-Chemicals Limited, subsidiary company, on a salary of 75,000. Board approval where? In the main company, fertilizers. I'm getting a salary of 3 lakhs in subsidiary company. Then board plus ordinary resolution where? In the main company, in the fertilizer. I am a director in Nagarjuna Fertilizer. My son is appointed as financial consultant in Nagarjuna Agri-Chemicals Limited on a salary of 75,000. Board plus audit committee. On a salary of 3 lakhs. Board plus audit committee plus ordinary resolution. So how do you understand? I and my relatives, they are appointed to hold office or place of profit under the company or under the subsidiary up to 2,50,000 board plus audit committee, more than 2,50,000 board plus audit committee plus ordinary resolution. Like that, you must understand. Holding office or place of profit. So you can't loot the funds of the company just like that. I repeat 1,000 times, it applies to private companies also. We have to follow all this. And the consequence of violation is terrible. Then we'll now move on to, we are now finished. What is the related party? What are the related party transactions? And what are the various approvals to be taken? Further procedural compliances which you are to make. What are those further procedural compliances? First, I told you audit committee approval is required only when you have the audit committee constituted, or even if it is arm's length basis. Next, of course, audit committee omnibus resolution, all put together, you can pass one resolution. Now, I told you all the transaction has to go to the board, not only to the board, at the meeting of the board, not resolution by circulation. The directors have to sit across the table, discuss the pros and cons and approve it. Next, the notice of board meeting has to give all these details. Name of the related party, nature, duration of contract, material terms, advance paid, manner in which you determine the price. Hey, what is he saying? You directors of the company, use your brain. If you have any, sorry. He is saying, you directors of the company, what are you doing? Here is a director who is related. You are approving a contract. Whether he makes profit or not, is presumed that he is making a profit. So go through the transaction. Why are you routing the transaction only with that firm, with that director, as if our population is very less in the country? What is the price at which he is offering? Whether the company is gaining or the company is losing. That's it. If the contract is in the best interest of the company, award the contract. Otherwise, avoid the contract. Over. That's the idea. Don't blindly take a decision. To enable the directors to involve themselves in informed decision-making process, use all the information, have a discussion, take a decision. I'm not saying that the director, these people should not enter into contract with the company. Please enter. There are certain raw material, scarce supply, only he can supply. Fine. The idea is that the director should not be unduly benefited, and all the related party must not be unduly benefited. That is the idea behind the guideline. Next, when the matter goes to the general meeting, same story. The explanatory statement must contain all these details. That means shareholders also, when you pass ordinary resolution, don't blindly pass. Involve yourself in informed decision-making process. You know the value of the contract is so much. That's why they are asking shareholders approval. Go through that. Never entered into related party. Huh? It is becoming a publicity area. Right. Then next. In the board report also, you have to give the list of related party transactions. The story is not over that board has approved, audit committee has approved, general meeting has approved. Still, ni paru gangalo kalispoyindante related party uddaya. Mottam board report lo rai, write all the details, justification of contract. These people have approved, no. How much profit you have made, all those things. Then story doesn't end there. When I go to disclosure of interest, I'll connect this at the later part of the session. So if you are a related party, you are to disclose your interest. That's a separate section, but there's no conflict between this section and that section. So here what you do, you go and you have to very clearly disclose how you are interested in the contract. I'll come to that later. Even in private company, you have to disclose the interest. However, you can participate in the proceedings in a private company, whereas in public company, you cannot participate in the proceedings. Private company, when it is in general meeting or board meeting, you can participate in the proceedings. The next, one register has to be maintained in MBP4, register of contracts in which directors are interested. Update all that, the related party transactions in that register. These are all the further procedural compliances you have to make. First one, what are the exemptions? This section will not apply to transactions in the ordinary course of business in the arm's length basis. In fact, 90% of the related party transaction try to escape in this exemption. What is the idea? While ignorance of law is no excuse, the director concerned is saying, hey, look, I'm a director in this company, I'm a partner in the firm. The company entered into transaction with the firm. Technically, it is related party. But then please understand how the transaction took place. I'm not aware of the transaction. No, I'm not taking a recourse that I'm not aware of the transaction. The transaction happened. The purchase manager of the company came to the shop of the firm and it was a shop sales. Neither I received any benefit nor given any benefit. There was no credit. It was cash. It was at market value. Neither we have received any discount nor given any discount. Arm's length transaction. The arm's length transaction means what? Though the transaction is between related party, it was conducted as if it was unrelated and there is no conflict of interest. So I have not made any profit in the transaction. The onus of proof rests with you. Most of the transaction can escape here. Then ordinary resolution is not required. The transaction between holding and wholly owned. Just now I said holding and subsidiary company is a related party transaction. What is one small concession given if it exceeds the 10% limits and all that? Come on, ordinary resolution is not required. That's all. That is the small concession probably he has given. And 188 will apply to all type of contracts, oral contract, written contract, express contract, implied contract, de facto contract, de jure contract. If it comes under the definition of contract, it will apply. And one more thing, you can't pass a general approval. General approval you cannot pass. That means case-to-case basis you have to give the approval. Suppose you enter into 48 contracts with a related party or with different related party. 48 board approvals are required. You cannot give a general approval. And if it applies ordinary resolution, 48 ordinary resolution is required. They have to understand each and every point in the contract and give the approval. And it very much applies to public as well as private company. Now, last area, what are all the penalties and consequences? Contract is voidable at the option of the board or shareholders. Voidable means what? I've got an option. If the contract is in the best interest of the company, I will treat the contract as valid. Otherwise, treat as void. So the board has got a chance. Let them enter into contract. Doesn't matter. When it comes to us, if it is the best interest, I will award the contract. Otherwise, I will avoid the contract. So I can treat, until I treat as valid or void, it will be voidable. And the board approval or general meeting approval has to be given within 3 months. Then second consequence, if the other party with which the company is entering into contract is a director or employee, you are an internal person, come on, you can recover all the losses which the company has sustained because of the contract. If it is a firm and another outsider, there is nothing you can do. Third consequence, this is the terrible consequence we saw yesterday. If a director or any person is convicted of the related party transaction, you get your office, and next 5 years you cannot become a director of the company. Terrible. Disqualification of director and vacation of office. In both it is there. For next 5 years you cannot be appointed as director. The show doesn't end there. If it is a listed company, punishment, imprisonment 1 year and fine 25,000 to 5 lakhs. Then other company 25,000 to 5 lakhs, no imprisonment. See, contract is voidable. You will recover the damages and compensation from director or other employee if they are the other party. It will lead to vacation of office of director and also disqualification. Then punishments, imprisonment, fines and all that. One of such a fantastic provision related party transactions. I am telling you, in normal circumstances, these things will not come into picture. And in the Caro report, you have to report this. Nothing will happen. Once a fraud happens, once there is a dispute between the shareholders and directors, and then the game starts. Once they do inspection, investigation, and the ROC people come, they are real criminals in terms of knowledge, they'll catch easily. So, sir, now I received one message from a chartered accountant. Sir, after listening to you, I fear to sign an audit report. I said, don't fear. Why you fear? Go through all these things. You do your audit properly. Educate the customer. Law is only for compliance. Go ahead. It's not to fear. Yes. We will now move to next section, 184, disclosure of interest. Disclosure of interest. Whenever, please keep in mind, whenever 188 comes, 184 also comes. But there's no conflict between the section. In 188, your duty is approvals. In 184, there is no approval. You have to walk in across to the board meeting where you are interested in the contract and simply disclose how you are interested. That's all. And in a private company, you can participate in the meeting. So disclosure of interest, no approval is contemplated. I'll just tell you, where the director of the company is directly or indirectly concerned or interested in a contract or arrangement, proposed contract or proposed arrangement, entered or to be entered by the company or on behalf of the company, he should disclose the nature of concern or interest at the meeting of the board. ఈ ప్రహ్లాద చరిత్ర మన అందరికి తెలుసు, isn't it? That king Hiranyakasipu, he did penance and got a vara from the Lord. He thought he is the most intelligent person in the whole world. And what kind of boon he took from the Lord? He should not be killed inside or outside. That's why the Lord comes and tears his body into pieces at the padaka, that is at the entrance, which is neither inside nor outside. That is why in Indian custom will say, if any transaction takes place, either you do outside or inside. Don't stand near the door, near the door frame and exchange. Second, he said, I should not be killed during daytime or nighttime. The Lord comes during Sandhya time, which is neither daytime nor time. He should not be killed by man or animal. Lord Narasimha is neither man or animal. He should not be killed with anything living or dead. He uses nails to pierce the body, which is neither living nor dead, like that it is. While related party transaction was simple to understand, what is related party? What is related party transaction? what approvals to be taken, what procedures have clear only. But disclosure of interest, very vast, where the director is directly or indirectly concerned or interested in a contract arrangement, proposed contract arrangement, entered or to be entered. Yendukala chaptadu, he says, Mr. Jayaraman, listen, I am not asking you to transfer your property to the company. Hey, Jayaraman, you are a director. A black mark in your white shirt will be visible. So what I'm asking is only disclose. Type of transaction, don't bother. Transaction entered with whom, don't bother. You are directly or indirectly concerned in the contract. Just disclose. You go to the board meeting and say, sir, in this particular firm, that my so-and-so person is relative. Whether he's really relative or not under the Companies Act, don't bother. See, tomorrow the other directors will feel bad if you don't disclose. That seems to be the idea. Come on, see. Right. And top of it, why are we discussing so much? Yesterday I told you, violation of section 184 general disclosure, violation of 184 subsection 2 specific disclosure will lead to vacation of office of director. Section A telidu, then what is vacation of office? I'm sorry, I'm not trying to hurt the feelings of anyone. In day to day, we are forgetting the whole thing. That is my idea. That's my overall idea. So 184 subsection 1 and 184 subsection 2 are two separate disclosure. Even if you have done 184 subsection 1 disclosure, you have to go for 184 subsection 2 disclosure also. Come on, let's start what disclosure you have to make. And in both the cases, nature of concern or interest also you have to disclose. First, every director at the first meeting participates, and thereafter the first board meeting in every financial year. And if there's a change in disclosure, first board meeting after such change, you should disclose your concern or interest in the companies or body corporate in form MBP1. What he's saying, Mr. Jayaraman, you are a director of a public company or private company. Excellent. You are interested in many companies, corporates, body corporate, private company, public company, foreign company, corporation, sole proprietorship, partnership, HUF, body of individuals, various business organizations, you have some interest. Fantastic. You take that form MBP1 and write in that form MBP1 whether you are a director or member of body corporate. Write all those details. I'm a director, so-and-so private company, member, so-and-so private company, public company, body corporate. I'm a sole proprietor in so-and-so sole proprietorship, partner in so-and-so partnership firm. I'm a trustee in so-and-so trust. Any business organization you write. Having written that in MBP1, Mr. Jayaraman walking across to the board meeting and just disclose. And you are, by disclosing, what are you indirectly telling the other directors? You are telling the other directors that in future, if the company enters into contract with any of these organizations, you please take it, I'm interested. Na pranam diyaku. That's what he's trying to tell. Just beforehand, go and disclose. These are all the organizations, whether I'm making profit or not, don't bother. You take it, I'm interested. That's it. So the disclosure is what is contemplated in the section. So in which board meeting you have to disclose? Beautifully he says, after you become the director in the first board meeting, then in every financial year, once the general notice is given, that's valid for one financial year, in the first board meeting, if there are some changes in the directorship and membership, those changes in the first board meeting, go and disclose. Otherwise, your neck will be sliced. Vacation of office of director. This is what he's trying to tell. Then the notice should be kept in registered office, preserved and custody. And what all you should disclose? He's used the word body corporate. So it will include private, public, LLP, corporation. He used the word firm. He did not specifically say partnership firm. So the word firms include sole proprietorship, HUF, association, everything. And one interesting point you find is only directors' interest is to be disclosed. Directors' relative interest need not be disclosed. And most most important, I already told you, you have to disclose in 184 subsection 1 whether the company actually enters into contract or not. This is a general disclosure. Now come to specific disclosure. This is what I was telling you. Where the director of the company is in any way directly or indirectly concerned, interested, contract arrangement entered or to be entered with the body corporate in which director is holding so and so, or with any firm, then you should disclose the nature of concern at the meeting of the board. Now look at this table. This will be simple to understand. Specific disclosure comes when these type of contracts are entered by the company. Please understand, the contract may come to the board, may not come to the board. We have nothing to do with the approvals in the contract. 184, we are talking of just disclosing the interest. Company enters into contract with the body corporate, in which this interested director is holding more than 2% shares, or is a promoter, a manager, or CEO. Now, company is entering into contract with some firm in which this fellow is a partner, is a director here, partner, or with any other entity, sole proprietorship, partnership, body of individuals, association, HUF, in which this interested director is owner or member. So as and when this such type of contracts come to the board, approvals and all is taken care in the related party transaction. What is your duty? You come across to the board meeting and just disclose you are interested. Your duty comes to an end. So 184 subsection 1 is general notice. 184 subsection 2 is when these specific contracts are entered by the company, then you must come to the board meeting where the contract is discussed and go and disclose. Next. Where director who is not connected or interested at the time of entering the contract, he shall become concerned, interested, and thereafter he should disclose concern or interest forfeit or in the first meeting of the board. Instead of reading this, I will tell you an easy method to understand. Please see the slide. Proposed contract means still the contract is not entered. And it comes to the board meeting level. It is not done by resolution, by circulation. It comes to the board meeting level. And wherein you are already a director and you are interested. If these 4 parameters are there, go and disclose in that board meeting where the contract is taken up for consideration. Beautiful. The contract discussed in one meeting and you disclose in some other meeting, there is no correlation. Easy to understand this. Proposed contract coming up to board meeting level, you are already a director, you are already interested, you disclose in that board meeting. In respect of all other permutations, combinations, you go and disclose in the first board meeting held after you became interested. Whether the contract comes to the board or not, don't bother. I'll tell you. For example, sir, the contract was already entered. Doesn't matter. After that, in the first board meeting, you go and disclose. Second, sir, the contract never came to the board level, not required. It was not related party. It was approved by the manager officer level. Doesn't matter. In the first board meeting, go and disclose. Sir, the contract was approved by resolution, by circulation. Doesn't matter. In the next board meeting, go and disclose. Sir, at the time when the contract was there, I was not a director. Doesn't matter. After you become a director, it's a subsisting contract, go and disclose. Sir, I was a director, I was not interested when the contract was entered. Doesn't matter. After you became interested in the first meeting, go and disclose. Disclose chayivaya lepata pranamurti. How beautifully that drafted the section. As I told you, I am not asking to write a will and transfer the property. Just walk in across and disclose. Sir, directors will get confused. No problem. The company secretary will put up to the contract. What is that contract is referring to? That is the idea behind this kind of disclosure. Next. And 284 very much applies to private company also. But only thing, you can participate in the meeting. You can vote. You can discuss with the other directors. That facility is not available in case of public company. Then, what you should disclose, please understand. Say a company, ABC Industries Private Limited. This company is entering into contract with a firm in which I am a director and also I am a partner. I should walk in across to the board meeting and say, sir, the firm with which You are entering the contract. I'm a partner. Oh, very nice, Mr. Jayaraman. Okay, sit down. Yes, sir. First, you tell me, when did you become partner? Second, who are all the other partners? Sir, Anni Cheppala, Anni Cheppra Babu. Third, sir, what is the net profit ratio? What is the value of the contract? Sir, 10 crores. What is the net profit ratio? Sir, Chepra, net profit ratio. Sir, 20%. Beautiful. So how much you are looting? Sir, no. How much you are getting? Total profit, 2 crores. So what is your profit sharing ratio? Equals are 3 partners. So you are getting 67 lakhs. To that extent, should I disclose? Yes. Nature of concern or interest should also be disclosed, not the fact you are just interested. It normally involves even disclosing the exact extent of profit. What game adigina cheppalsinde? See, otherwise, if you don't disclose, not only vacation of office, the directors will avoid the contract. That's simple. Whatever that's it. So this 184 is a correlating section for 188. Just disclose the interest. And what are the consequences of violation is separate. Here also contract becomes voidable. Then here, if you don't you contravene subsection 1 or 2, imprisonment straight away. They are directly global dose. They always want to arrest and imprison the director or fine 1 lakh. Then the top point, as I told you, violation of 184 subsection 1 and 2 will lead to vacation of office of director. Then this section will not apply to contract arrangement between 2 companies or 1 or more company in body corporate, if where the directors of one are holding more than 2% of the shares. I'll just explain this. One big drawback you find in section 184 is, even if you hold 100 shares in the other body corporate, you are supposed to disclose. Now look at the fun. Reliance Industries Limited, or let us say ABC Industries Private Limited enters into contract with Reliance Industries Limited. Sorry. ABC Private Limited law, you are a director. In Reliance Industries, you are holding, let us say, 100 shares. And the joke is, you are writing in the general notice and saying, indirectly what you are saying, hey, if the ABC Industries Private Limited enters into contract with Reliance Industries, you take it, I am interested. Daridruda, what interest you have got? 100 shares you have got in Reliance Industries, but Chowkidar also will not allow you inside. Stupidity, isn't it? So the law says, if you are interested in the other organization because of shareholding interest, you have to disclose the interest only when your holding is more than 2%. Otherwise, you forget it. If form MBP 1 lo kuda, the form which you sign, you should hold the shares in that company how much? More than 2%. Then some influence you are said to be having. Not just holding 100 shares, 500 shares and all. So this is the point. Here also there's a lot of controversy. The purpose is to ignore other small sharing holders. End of the day, if you are holding exactly 2% also, you don't have to disclose. Only when more than 2% you have to disclose. Now let me look at some more issues. This exemption is creating more confusion than solving the problem. Situation 1. See, NFCL is entering into contract with Reliance. Director A in NFCL is holding only 1% shares. Director A, sorry, not B, I have made a correction. Director A is also a director in there's corrector. Director A is holding 1% shares in Reliance. Director B is holding 1.5% shares in Reliance. Should I disclose the interest? Yes. We should disclose the interest because what is the wording used? Shareholding by any director or 2 or more of them together shall be considered. Now my question is, How will you comply with this? Hey, directors holding shares in some companies, they are private information. Meeku enduku cheptada evadu? I am a director. Can I talk to another director and say, come on, sir, how much shares you are holding in Reliance? He will say, go to hell. If I'm holding more than 2% only, I will disclose. Less than 2%, I'll keep quiet. So every director kept quiet, thinking that his holding is less than 2%. And later on, when I totaled up all the directors holding together, it came to more than 2% there. Then the head of all the 12 directors will be sliced. So the question arises, how will I comply? You get the point? So what I do in my companies is, I take one official MBP, one unofficial. Even if you're holding 100 shares, 200 shares, I'll take those details and total up all the directors. And if it exceed 2%, whistleblowing is done, I put in the official one. So one fellow went to the department and asked, sir, how will you comply this? Regarding the difficulty of ascertaining the other director shareholding, department he said, it should not be difficult. Daridruda, etlara, it will not be difficult. But bureau. Anyway, department doesn't want to give any kind of clarification here. So another issue. This, I told you, this exemption has given more problems than solving the problem. Director A is at 1% shares. Director A is also a director. Should I disclose the interest? Then the department gave the clarification. If your interest in the other organization stems only out of shareholding interest, then 2% should be considered. If you are otherwise interested, director interest, the section very much applies. The 2% is irrelevant. Then the 2% holding, which date you should take? It is the date of the contract, not the date of board meeting. Okay, it is the date of the contract. Sorry, one more issue. NFCL enters the contract with Reliance. Director A is holding 1%, relative director 1.5%. Should I disclose the interest? Yes. That 2% benchmark is given only for director. Generally, when you read the section where the director is directly or indirectly concerned or interested, generally in this section, director directly holding the shares is called direct interest. Relatives of the director holding the shares is called indirect interest. Look at the fun. Reliance, NFCL enters into contract with Reliance. I am a director in NFCL. In Reliance, I am holding 5 lakh shares, which is less than 2%. So when they enter into contract, I need not disclose the interest. But my wife is holding 100 shares in Reliance. I have to disclose the interest. Don't ask me why and all. This is what they have drafted. Because indirect interest, the 2% is not quantified. Then I told you the date of contract is the criteria. Sir, as on the date of board meeting, I was not interested, so I kept quiet. But as on the date of contract, my holding increases, I'm interested. In the first board meeting, go and disclose. Then 2 more clarifications they gave. Now look at a situation very carefully, very interesting situation. Of course, in DMAT, the transfer of shares is done immediately. I'm talking of a private company where there's no DMAT. Suppose I'm a director in this private company. I'm also holding shares more than 2% in some other public or private company. Now I'm holding 10% shares. I have to disclose the interest. But my point is, I've already sold 9% of the shares. But stupid transferee, for reasons best known to him, he has not sent it for registration of transfer. So as per the records of the company, come on, I'm holding 10% shares, but beneficial interest I've got only 1%. Should I disclose? Department says, then confuse Jekra, disclose Chay. Sir, I don't have beneficial interest, still you disclose. Because too much of clarifications cannot be given. So this was the discussion on this topic. So it applies to all the directors, nominee director, government director, everyone. Alternate director as well as original director has to comply with the provisions. No exemption to anyone. Then you have to maintain one register. Registers in contract in which directors are interested. And auditor has to certify this register. And what entries are made? First one, 184 subsection 1 disclosures where the holding is more than 2%, obviously, you have to write all the details in the register. 2, 184 subsection 2 disclosures, you have to write in the register. 3, all related party transactions, 188 cases, you have to write in the register. And who can inspect it? It can be inspected by members only without fee. Non-member, because he has no interest in that, he cannot inspect. Inspection should be made during business hours. And a very interesting point, which we all have forgotten, this is, the register should be produced at the commencement of the AGM. It should remain open during the continuance of the meeting to any person who has a right to attend the meeting. All this register of contracts where the director is interested, even in private company, please put up at the AGM. Any of the member can inspect it, and he can take copies also, 10 rupees per page within 7 days of request. We'll now move on to the next area of discussion. Restriction on non-cash transaction involving directors. Very simple, non-cash transaction. The director is supplying software to the company and you are allotting shares, non-cash transaction. So all non-cash transactions with the company or even with the holding company, associate company, it should be approved by shareholders in the general meeting. This problem came because most of the non-cash transactions are with reference to intellectual property rights. Valuation ever chestaru, that is a big issue today. In intellectual property rights, it's the big issue. My brother has prepared a hotel software package. And he has sold that package for 30,000, 40,000 each hotel and made a lot of money. One day, one marketing company came to him and said, you please sell the package to us with source code. We'll pay you 1 crore. Now the question is how you have done the valuation of 1 crore. Then within 3 months, another marketing company came and said, sir, we'll pay you 5 crores. Any relevance between 1 crore and 5 crores? And that is why this valuation chapter has been introduced. So anyway, the board can take people for a ride. So the matter has to go to general meeting, non-cash transaction, and it has to be has to be done by a registered valuer. We'll now move on to managing director, whole-time director, manager. Now, in a private company, it is all optional to appoint these people. If you don't want, don't appoint. But if you appoint, because KMP is not compulsory, if you appoint, then you have to comply with all these provisions. Who is basically a managing director? Many of us have not understood the definition. First, you must be a director. And how the powers are given? By virtue of an agreement or board resolution or general meeting resolution or through memorandum articles, he is entrusted with substantial powers which otherwise is not exercisable by him, and includes a director occupying the position by what our name called. So let us see. And also he says, provided the administrative acts of routine nature, power to affix the common seal, check, negotiable instrument are not substantial powers of management. How beautifully explains. He says, what is substantial powers of management? Not defined, not possible to define also. Can you example chapter? Hey, he is a managing director, don't cheat him. Even routine powers of administrative nature, daridra powers, don't say he is a managing director, power to affix common seal. A common seal to kodtanu. Signing the check, negotiable instrument, ivanni power aya, ivanni drudgery. Power ante there should be discretion. So he beautifully says, these are not powers of management. These are routine powers of administrative in nature. So then what is management? So what is the substantial powers of management? You have to practically understand. Purchase powers, sales powers, administrative powers, recruitment powers, dismissal powers. He is the fulcrum of the organization around whom the whole organization revolves. He is the managing director. So ingredients law, he must means comprehensive definition. He must be a director. And not necessary that, you should first act as a director and then the same resolution, you can appoint him as MD also. Then 5 methods by which agreement is given, power is given. and includes any person by whatever name called. Hey, look at it. You call a person as managing director, but don't give substantial powers of management. Is he a managing director? No. You don't call him as MD. You call him American nomenclature, like president, vice president, chief executive, like that. Is MD? Department said, find out two things. Is he a director? Is substantial powers of management is given? Yes, he's a managing director by whatever name called. So these are the ingredients. Now he will function subject to supervision, direction, and control of the board of directors. He is subordinate to the board. Can a company have 2 or more MDs? Yes. I never said the whole of management. I only said substantial powers of management. At one point of time, Reliance Industries had 3 managing directors. Dhirubhai Ambani, chairman managing director. Mukesh and Anil, joint managing directors you can have. I never talked of whole of management. Next. Can the same person be MD in 2 or more companies? I mean, if permitted in the Companies Act, can I be in 2 or more companies? Yes. In the definition of managing director, we never said he's a whole-time employee. Substantial powers of management is the deciding criteria. One chartered accountant, what he said, he asked in the attendance register, MD's name was not there. He asked the personnel manager, you write the MD's name also in the attendance register. I objected to that. After writing the name of the managing director in the attendance register is an insult heaped on him. He is not a whole-time employee as such. He need not come to the office from morning to evening. You understand? You have the remote, that is enough. So deciding factor is substantial powers of management. So if permitted by law, you can become a managing director of 10 or 15 companies also. You are not, this is the difference between whole-time employee and whole-time director and managing director. Then, what is the position of MD? Hey, he is the main representative of the company. He occupies the position as director and employee. He is the agent of the company. He can bind the company. And in all economic, fiscal, labor legislation, he is the main person. He is the person who will sign the income tax return, TDS return. He is the representative of the company in many fields because the board cannot sign by itself. On behalf of the board, the managing director will sign. Who is a whole-time director? Unfortunately, they have not defined. Somewhere they said whole-time director is director in whole-time employment of the company. So there are 3 differences between MD and whole-time director. MD is not a whole-time employee. This fellow is whole-time. So a person can be managing director in any number of companies, but he can be a whole-time director only one company. Now both are entrusted with substantial powers. Managing director is entrusted with substantial powers for the whole organization, whereas whole-time director is entrusted with sectoral powers. Director production, ante production related substantial powers of management. Director finance, finance matters related substantial powers of management. This is the difference. Third, manager. Who is a manager? Individual subject to control of his management of the whole or substantially whole. Unfortunately, in our country, this manager concept has not picked up. Hey, manager is much more powerful than managing director. Elaga, managing director is given only substantial powers of management. Manager is given the whole or substantially the whole of the affairs of the company. I'll tell you like this. Say, they started, say, a private company or a public company, Reliance Group. The Mukesh Ambani is also a director, but he has no time to manage all that. In the board, he calls his friend who is appointed as manager, and Mukesh tells it, hey, take down all the details. Yes, sir. 1. The first year of production, we want a production 32 tons. Yes, sir. Second, we want a sales of 40 crores. Yes, sir. Third, we want a net profits of say net profits of 5 crores. Yes, sir. We want to declare a dividend of 20% the first year. Yes, sir. Now get lost. To achieve this, whatever you want, you do is manager. He's given the whole of management. That is why a company can have 2 managing directors, but a company can have only 1 manager. Substantial powers cannot be given. Whole of management cannot be given to 2 people. Simultaneously, company cannot have managing director as well as manager. So the difference is manager may be a director, may not be director. He is given substantial powers. He is given whole powers. Powers are delegated by 5 ways. Here, powers are given by the board. A company can have 2 MD, here only 1 manager. And we saw the other day in removal of managing director, the office is co-terminus. If you throw a director, office of MD comes to an end. But if you throw a manager who is also a director, if you throw him as a director, the office of manager will continue. So managing director, whole-time director, manager. So I told you a company cannot appoint simultaneously managing director as well as manager. Tenure of office. Now you can appoint this MD or whole-time director, even whole-time director or manager only for 5 years, even in private company. Lifetime, you cannot appoint all these people. This is only to give an opportunity for all the shareholders to review his performance every 5 years. Because I find this managing director, whole-time director, there's a concept of resistance of change. This managing director, whole-time director, they are bogged down with the day-to-day problems so much, they don't appreciate changes told by the other directors. They say, you come to the factory and stand, you will know. So this is to counter-check the performance of the MD, whole-time director. Appoint him for 5 years. Not more than that. If you want, you reappoint the same person. Additional disqualifications are there for the managing director, whole-time director. What are and the manager? First one, and this additional disqualification arises not only at the point of appointment, but also will continue during his tenure. What are the additional disqualification? Age should be 21 years to 70 years. Age should be. So 21 years is a reasonable maturity. Then 70 years. Then if you have attained the age of 70 years, then special resolution has to be passed. It need not go to central government for approval, special resolution. Now they made one amendment. Instead of passing special resolution, you pass ordinary resolution and take central government approval. That is sufficient. Because shareholders generally don't appreciate. And the board feels he is really worth, even though he's aged 75 years. Get ordinary resolution. Central government is interested in industrial growth and development of the country, get their approval. Next, it is additional disqualification. Is undischarged insolvent, anytime adjudged as insolvent. Yesterday, for a director, we saw the other day, for a director, we saw after he is discharged from insolvency, he can become a director. But here, lifetime disqualification. Because as a managing director, insolvent means you could not manage your own affairs properly. What you will do as a managing director, dealing with the other people's money. So lifetime disqualification. Then third, this is anytime suspended payment to creditors, made compensation with them. See, some people nature is go on postponing payment, postponing payment, postponing payment. That's the nature of it. Because when you make payment, he has to keep the hand in the pocket. Heart is here. You have to press the heart. You'll have heart attack. As simple as that. We don't want such people to be managing director. After all, he has agreed for 1 month credit, 2 months credit. In market, if you delay the payment, your profitability is gone. So we don't want such people to be appointed as MD or whole-time director or manager. Suspended payment to creditors or made a compensation. Compensation means paying lesser than what was agreed. And fourth, he has been convicted and sentenced for more than 6 months. Now, for 5 years, all that is not there. Lifetime, if you are convicted for 6 months or more, forget, you cannot become managing director. So these are all, no waivers can be granted. Lifetime disqualifications. Then, removal from the office of MD. Don't go near 169. removal as a director. Here, the managing director shall function subject to supervision, control, and direction of the board. So board themselves can remove. There's no technically removal here. You withdraw the substantial powers of management, he stands, he withdraw, that's all. But for any reason, already I told you, under 169, if you remove, the office of MD is coterminous, that will also come to an end. Can you appoint a MD, whole-time director manager, retrospectively from a old date? Now look at a practical problem. You appointed for 5 years. 5 years is a too big time to monitor. And today, let us say, almost 2020, another 5 years over, come on, you forgot. You forgot, and suddenly you remember today that he is continuing as a managing director. Now, only solution is retrospectively you have to reappoint from 1st January 2013 to today to save yourself. So one fellow went to the department. Because you are paid a lot of acts he has done as a managing director, you are paid remuneration running in lakhs, it comes to crores. He has done a lot of acts, all those things. He went to the department. Department said, I'll break your legs. No question of retrospective appointment. You appoint from today or prospectively. So when no retrospective appointment can be made, what about the subsequent acts he has done? Invalid. My God. Company will not take the responsibility. Doctrine of indoor management protect the outsider. But for all the losses, company can recover from him. It's a case of irregular exercise of power. No irregular, but exercise of power by a person who has no authority at all. Managerial remuneration. For private companies, no limits. No limits. Any amount you can pay. Remuneration means any money payable to him, including perquisites. But only thing, remuneration should be provided in the articles or by ordinary or special resolution. Provisions will not apply to private company. Any amount you pay any amount, but only thing whether you pay if there's profit or loss you pay. Freedom is given. Public interest is not involved. Sitting fees also no limits. Only the public company you have sitting fees restricted to 1 lakh per meeting. So here any amount you can pay. Any remuneration. Only thing board has to approve it. That's all. What about the sitting fees any amount? What about traveling expenses? The power is derived from the articles. So all the sitting fees, traveling expense, whether you get flight charges, rail ticket, all attending board meeting, all that depends on your articles. And one interesting point is directors can get traveling expense for attending board meeting as well as general meetings. But sitting fees you cannot pay for general meetings, right? But expenses should be kept at the minimum. There's a clarification. If you're attending 2 or 3 meetings, it has to be proportionately charged. Then reimbursement should not be a source of profit or auditors to report. Now, under section 143, the auditor has to make a statement whether the remuneration is in accordance with the provisions. So this is more for public company, it makes sense. Anyway, you have to write in the private company also. In a private company, any amount of remuneration you can pay to the directors without any limit as such. Next, compensation to MD whole-time director for loss of office. So if you terminate him within this period of 5 years, you have to pay. Ordinary directors will not get compensation. Only MD whole-time director, manager will get compensation. He will not pay compensation in these cases. You resign, vacated, amalgamated, and winding up takes place because of his negligence. You are guilty of fraud, breach of trust. You have instigated to bring about the termination. So under the rules also, they have put some more issues. In these cases also, you cannot pay compensation for loss of office. In the rules, companies defaulted in repayment of deposit, repayment of to banks, financial institution, payment of taxes, statutory dues, payment of dividend. So law-abiding company ke pay compensation. When the creditors are suffering, come on, we will not pay compensation. How much compensation you will get? Only for 3 years or balance period, whichever is less, calculated on last 3 years drawn salary. This is the compensation you will get. And not only that, now there's amendment that payment of compensation should be approved by the shareholders in the general meeting, and you have to give all these details to the shareholders in the general meeting to justify the payment of compensation. Now, recovery of remuneration, there's one section where the other day we saw you can restate your financial statement. You can reopen the financial statement, voluntary or compulsory reopening. Because of the reopening, if he is not eligible, of course, this doesn't make much sense in a private company because any amount you can pay. But you have passed a resolution, he's paid 3% of profit, 4% of profit like that. Then if you are paid in excess, you can recover all that compensation from the managing director and all that. Now, what about KMP? Key managerial person. These provisions will not apply to private company. It's not compulsory that you should appoint MD, whole-time director or manager. If you want to appoint, but once you are appointed, you have to comply with all these provisions. But company secretary is compulsory to be appointed even in private company if the paid up capital is 10 crores or more. When you appoint the company secretary, he will not come within the definition of KMP. He's only a company secretary, 10 crores or more, full-time secretary is compulsory. Some restrictions are there in the appointment of chairman. Individual may be appointed in pursuance to articles as well as MD CEO after 1(4). You only if the articles provide and you don't carry on multiple business. Otherwise, chairman should not be MD, CEO plus chairman. Either is MD plus chairman or CEO plus chairman, only when you are going for single product. If you are going for multiple product, then chairman should not be MD, he should be a separate person. However, very big public companies with share capital 100 crores and turnover 100 crores in multiple business can have, if they have got CEO for each such business, then MD and chairman can be the same person. Now, restrictions in the holding a number of offices by KMP. See, what is that restriction? KMP should not be more than one company. That means if you appoint a company secretary, CFO, or even CEO, all your activities should be one company only. You can be a director with the permission of KMP. That's all. Those days, what we used to do, we used to be a finance manager in 10 companies. All that is not permitted. All your activities should be in that company or subsidiary companies of that company is permitted. And you KMP, finance manager, CEO, CFO, that is, and company secretary, you can be as a director in other companies with the permission of this company. Then for managing director and manager, they are permitted 2 companies, whether private or public. A company can appoint the second company, but in the second company, hell a lot of restrictions is there. Please see, you are already MD or manager in one company, whether public or private. You are appointed in the second company. What are all the second restrictions? In the second company, a resolution should be passed at the board meeting. Consent of all the directors and specific notice has to be given. What is the idea? In the second company, in the board meeting, all the directors must be convinced. Why are we appointing the same person as a managing director? Where is he going to find time? Or there should be some kind of connection between the 2 companies, same promoters. Or this could be the finished products of one company becomes the raw material of another company. So to control the production schedules, working capital of both the companies, some requirement must be there. So let all the directors approve the proposal. So more than 2 companies, you cannot, the same person cannot be MD or manager. And company secretary should be a qualified person, and he should be a member of the Institute of Company Secretaries of India. Now, for less than 10 crores voluntary, they have put some rules. If you are interqualified and other rules also, you can be appointed as company secretary, not compulsory, voluntarily you can appoint. Then duties and functions of company secretary, first time they have included in the act. To report to the board about the compliance. In every board meeting, give a certificate. You have complied with all the provisions of the Act, rules and other laws. Too much kada. Other laws, 644 laws are applicable to business organization, taxation laws, labor laws. Em certify chestade evadu. Edo istunadu ante. Then ensure the company complies with applicable accounting standards, secretarial standards. Then provide directors individually and collectively. MD cannot say, don't talk to the director. You will say, keep quiet. You have to educate each and every director about their duties, responsibilities. Facilitate the convening of board meeting, committee meeting, and attend them. In many companies I have seen, earlier, company secretaries will not be allowed inside the board meeting. He'll be treated as untouchable. Then after the board meeting is over, MD will say, these things you write in the minutes. Now this cannot happen. I'm the only one person who is not a director. Go and sit in the board meeting, and I can also listen to the scoldings the MD and whole-time director get from the other directors. And all approvals of the board, general meeting, government, other authorities, I am responsible. So they made an effort and represent in the various places, tribunals, this, that, and all that, and assist the board. So they have performed, given certain duties of the company secretary. Secretarial audit is not compulsory for private companies. I am not going into that. And one more point here is, even though certain duties and responsibilities is given for the company secretary, this no way will reduce the duties, responsibilities of managing director, whole-time director, manager. This is in addition to their duties and liabilities. We will now move on to inspection and investigation into the affairs of the company. Inspection. There are 3 routes of inspection. Please understand, inspection into the books of accounts is done as a matter of routine. If suddenly ROC people come for inspection, don't have to panic. But then how the inspection stems out? What are the routes? Route number 1. You file various documents with ROC, isn't it? Online filing now. And ROC, before taking on record, he will do some scrutiny. So in the first route, where on scrutiny of the various documents which you file with ROC, some regular documents, some periodical documents, and casual returns, you file the financial statements, annual returns, allotment of shares and things like that. If the registrar finds some mismatch or certain particulars are not given by return notice, he will ask you further information, explanation. And the moment you get, you have to furnish the information, explanation. Even if it relates to past period, those officers shall be responsible. If you don't give the information or inadequate information, by another notice, he will ask you to produce the books of accounts and other papers. This is route number 1. So be careful when you file the returns with ROC. Now, route number 2. In route number 2, again 2 methods. Method 1. When registrar is satisfied, who has complained to ROC, we don't know. Business carried on for fraudulent unlawful purpose, not in compliance with the provisions of Act, grievance of investors not addressed. Your reasons must be very precise. Business carried on for fraudulent unlawful purpose. Now, there is a company which has got license to manufacture using spirit. Molasses from sugarcane industry, he uses spirit, and spirit is used in paper industry and certain chemical industry. What that fellow is doing is not doing any manufacturing activity. He gets the quota of spirit and sells in the black market as Gudamba and makes a lot of money. So you are using the company as a frontage for your illegal activities. Someone has reported. You are doing import-export business. What are you doing? Smuggling. In big cans where you are importing scrap, a lot of gold and silver you are importing. You are using business only as a cover-up. ROC cannot be a silent spectator. Provisions of the Act has not been complied with. Many of you do not know. Even the minority shareholders can use this route and complain to the registrar. Investor grievance are not addressed. So this is method one. Then opportunity to be heard must be given. He will call for the information explanation. If you are not convinced, he will do an inquiry. Then in the second method in route 2, central government is also satisfied circumstance, direct the ROC to do inspection. For central government, the causes or reasons is not the criteria. So both the cases, ROC will do inspection in route 2. Route 3. Without prejudice the foregoing influences, the central government is satisfied, may warrant a direct inspection by the books of accounts. The difference between the earlier one and this one is, in the earlier one, ROC will do the inspection. Here, central government, circumstance is not the criteria. It is satisfied with the circumstance. They themselves will do the inspection. These are the 3 routes by which inspection can be done. Then, and in the third route, second method, they may authorize the statutory authority to carry out inspection. If it's a listed company, they will authorize SEBI. Come on, you go and inspect. IRIDA, you go and do the inspection. RBI, you do the inspection. These are all the routes for conducting inspection. And if you don't cooperate, penalty is terrible. 1 lakh rupees, 500 rupees every day. And when the inspection is done, what are the duties? Produce all the books and papers in your custody or control. Terrible punishments are given. Usually when inspection comes, we don't cooperate with them. In Japan, where are the final accounts? Sir, current year books are with the statutory auditor. Last year books, internal auditor. Prior to that, MD's wife is doing special audit in a house. What is he saying? He has got the civil court powers. It is not my duty to go here and there. Produce all the books and papers in your custody or control. Yes, Ardha. Second, furnish them with all statement, information, explanation as required. Sir, don't disturb us, sir. Whatever you want to write, you write. Whatever I want to write, I will write. You don't have to tell me. Produce all the statement, information, explanation. No, give all the details. Third, provide them with all assistance in connection with the inspection. Earlier, it was reasonable assistance. He said, in the New Companies Act, he says, provide them with all the assistance. What assistance? There was one case law, not in the Companies Act, in some other legislation. This MD was fond of dogs. And that stupid fellow used to keep a dog in his room also. So for the fun of it, the inspector comes to MD and says, what is this, sir? Every time you are withdrawing 25,000, 50,000 as traveling expenses, no enclosures, no attachments, nothing. Jimmy. Then the inspector says, okay, sir. No, what's your doubt? No doubt, sir. Don't put dogs and dog. Don't switch off the fan. In one case, they did not give table and chair. Kinda kuchoni. Chapa vestanu. Chapa vestava. Inspectors ke. Provide them with all assistance. Allow or make to allow inspectors copy of the books and other papers. They found out some number 2 cash book there. Then they asked the office assistant, get me photocopies of all this. Sir, 100 rupees. You take from the MD. You don't have to spend. You allow to make copies. Identification mark in token of done inspection. Sir, some finance managers, they say, whatever you want to do, you do it. Don't write all your nonsense ticks in the cash book. I will write. How he tells, you see, British drafting. These are the duties. Provide them with all the books and papers in your custody control. Furnish them with the statement information. Provide them all assistance. Allow them to make copies. Allow them to make identification marks. And they are powers of a civil court. Income tax raid lagadi. Don't touch the officers. They are judges there. So during raid or during inspection, discount protection, police protection to ostad vadu. So normally our people will say, the books are with so-and-so. Then they'll say, police inspector. And once you look at the police, you'll remember everything. That's the greatness of Indian police. what happened in this Janma, what happened in the previous Janma, what is likely to happen in the future Janma also will remember. Summoning and enforcing attendance, examining on oath. You summon the MD, arrest warrant he can get. Summon, enforce attendance, రాకపోతే మన అరెస్ట్ చేసి పట్రా, civil court powers ఇచ్చాడు వాడు. Inspection of books and registers at every other place, and penalty if you disobey, imprisonment 1 year and 25,000, and you are deemed to have vacated the office. The director, CFO, all these guys who have not cooperated in the inspection, and you are disqualified for holding any office in any company. In the 5 years that they have removed, you go home. You're not fit to be an officer. You are stopped the legal, you are stopped the government official from performing the duty. So this is about inspection. Seizure. When the registrar has reasonable grounds to believe the books and papers are relating to KMP, director, auditor, company secretary. Company secretary in practice is likely to be destroyed, mutilated from the order of the special court. He can enter, search and seize. What happened in Satyam Computers case? Ramling Raju gave a fax to Bombay Stock Exchange and SEBI and other people that have manipulated so many thousands of crores. He gave a fax at 10:30. Immediately what happened? The state government swung into action. They went to the magistrate, got the approval by 11:30. By 12:30, 16 lorries came into the premises and they seized all the computers, records and everything and took it away. 16 lorries within 3 hours. Otherwise, what happens? What investigation will do if all the records are burnt or manipulated, something like that? So they can do raid. Of course, with the order of the special court only. Because if you seize the books of accounts, your business practically comes to an end. Enter, search and seize. And they can keep it only for 6 months. But of course, they can take it once again. Now come to investigation. Investigation is very deep. Inspection is only looking into the books of accounts. Investigation into the affairs of the company. Come on, what are the roots of investigation? 210 investigation. The central government may order. Look at the point. Even if the circumstances for investigation is there, government has a discretion. See, I'm not saying Reliance Industries is above law. Yes, Reliance might have done some mistake. But then what is the contribution of Reliance for the GDP of the country? How much taxes he is paying? Blah, 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 blah. On routine matters, if the central government investigate, it sends the wrong signals to the industry. So government says, give me discretion. May order. 1. I have received an inspection report from ROC, and naturally that inspection report suggests unsatisfactory state of affairs, or the shareholders themselves have passed partial resolution, fight among themselves, they don't trust the board of directors, fraud, siphoning of funds, or in the public interest, RIR. Public interest has slowly crept in. Yeah, we are doing business for the interest of the company or shareholders. No, public interest enter. What is public interest? Very difficult to define. Based on case laws, we can say to protect the interest of the employees. There was rumors that in one company, 5,000 employees are going to be retrenched. Government and do investigation. Deterioration of the quality of the products. They took a decision, very bad decision, that the quality is coming down very badly in the market. Public interest. Siphoning of funds, public interest. Anything. Anything. Even deterioration in the quality of management also could be in the public interest. So much of powers is vested with the government. So report of the registrar, it is preceded by inspection, special resolution, internal members themselves what are in the public interest. Then central government may appoint inspectors to investigate. Second route in this 210 is court or tribunal shall order. Here shall. What are the reasons? That's not the criteria. Court is satisfied, tribunal is satisfied, some unsatisfactory state, government should order investigation. And the government will appoint investigation, and 25,000 rupees is the deposit you have to give. This is 210 investigation. 212 investigation by SFIO, Serious Fraud Investigation Office. What happened was, after the days of scam, they found out that investigation officers did not have the capability of investigation. And unfortunately, many of them were corrupt. So what the government thought, we will have an office in the department itself similar to CBI, Central Bureau of Investigation. They will have a lot of technical knowledge. They should be very sincere people. So they set up Serious Fraud Investigation Office. Very honest officers, officers having a lot of knowledge in accountancy, law, business, competition, and all that. So in 212, the government by order will assign the investigation to Serious Fraud Investigation Office. When you get a report from the ROC, special resolution, public interest, or request of the Department of Central Government, State Government, some GST people, income tax people, or SEBI, or someone has requested. What is the difference between 210 and 212? Simple ordinary cases, central government only will do the investigation. What is simple case? You leave it to them. If they find the cases are very complicated and large quantum of public interest is involved, the amount of fraud runs in hundreds of crores, then the central government will ask the Serious Fraud Investigation Office to investigate. Reasons the same. And what happened in Satyam case was, multiple people did the investigation. So we don't want that to happen. So any department request, they will hand over to Serious Fraud. Another thing, when SFIO is doing the investigation, other people will not do. Income tax, GST, Foreign Exchange Management Act, Import-Export Control, those people hand over all the documents. So one-point investigation will be conducted by Serious Fraud Investigation Office. And these people, they will pass appropriate orders, and they can arrest the people also, that extraordinary power. They have all the purpose, and people have to cooperate with it. Third route of investigation, 213 investigation. Here, in the first two routes, tribunal had no role to play. But here, members take the initiative. 100 members in case of company having share capital, 1/5 of number of members, they will apply to tribunal. These are the reasons, such evidence. Route number 2. In route number 1 is 100 members. Reason is not the criteria, some cogent reason to conduct investigation. In route number 2 under 213, who applied to tribunal is immaterial, but reasons are material. Business carried on to defraud the creditors and members and others. You should carry on the business for profitable purpose. You may incur loss, that's another issue. But there are some finance companies who are lending at 20%, 30% rate of interest. Sorry, who are borrowing money at 20, 30% and lending at 10%. You will never earn profits. It's only a question of time. You will loot the money and run away. The company started for fraudulent, unlawful purpose, oppressive to members. When I go to oppression, we'll discuss. Company itself was formed for fraudulent, unlawful purpose, money spinning companies and all that. Then, persons connected to the formation management is guilty of fraud, misfeasance. Members are not given information which they have to give. See, such serious case. In these 6 circumstances, come on, tribunal will go into this. After giving reasonable opportunity, they will ask the central government to appoint inspectors and investigate. Here also deposit of 25,000 rupees. 290 investigation. The inspector has power to, with the prior approval of the people, may investigate into any body corporate which is holding company, subsidiary company, or any body corporate which is MD manager, or any other body corporate accustomed to act. What is this? Example, I went to investigate, say in Reliance Industries Limited. Then I found a check, 250 crores. They have given the money to one group company, one subsidiary company. Another voucher, 500 crores, they have given to another company. By investigating into the affairs of only Reliance Industries Limited, it will not serve any purpose. Ultimately, I want to know where the money was diverted. That's what happened in Satyam case. When the money was diverted into 400, 500 companies, they did investigation into all the 400, 500 companies to see ultimately where the money went. So, it just happens in group companies when they are investigating the flagship company, they will also take the approval of the central government and simultaneously do investigation in the related companies. Body corporate, foreign company, Indian company, which was once a holding company, subsidiary company, or once it was under control of common managing director, and this is the height. Any other body corporate accustomed to act. I was telling you, 78 companies in Reliance Group, they can come and investigate on any individuals who have been the company MD manager to know the real purpose. Next, after investigation, what is the follow-up action they can take? Prosecution. They will appoint the public prosecutor, go through all those cases, the investigation report, and what are the sections which will violate it, and if prosecuted, it will result in fine or imprisonment, or as the case may be. Hey, the directors punished with fine or imprisonment, how does it serve the purpose? Ramling Raju was imprisoned. It seems he is learning Bhagavad Gita sitting in jail. Wonderful. Here are shareholders who lost money. Corporates have lost money. Individuals have lost money. Company has lost money. So, second, recovery of damages. Come on, trace out that money. Ultimately, bring it. In Satyam case, we are still expecting that at least a few crores will come back to the company. After considering the investigation report, proceedings should be brought against the guilty. And they may recover of damages for fraud and misconduct and all. Seize all the property, sell it. Recovery of property, that serves the purpose. Third one. In one route of investigation, we saw that the company is indulging in fraud, breach of trust, all that we saw, fraudulent, unlawful activities. If that is proved, we don't want this parasite to exist. So what we will do, in those cases are proved, you file a petition for winding up of the company on just and equitable grounds, or file a case for oppression and mismanagement. Next follow. So the central government has found that in all these cases, when a business carried on for fraud, unlawful purpose, oppressive, all that you can file the case. The second one is investigation into the affairs of the company. Now, another investigation they can do, investigation into the ownership of the company. One of the biggest problem we have is black money in this country. Government cannot be a silent spectator. There are hundreds of companies, I'm saying hundreds, where on record, someone is the director. On record, someone is the shareholder. But someone is the real person who controls the affairs of the company, who is the real owner. 216 investigation. Central government, they can appoint suo moto on suo moto or a tribunal. Suo moto. How do tribunal itself will come to know? It started as a regular investigation, but they came across many cases where it can be converted into 216 investigation. Who are the purpose, who are the financially interested in success or failure? See, all takeovers are not in the best interest of the company. We saw Vijay Mallya, the dangerous fellow who took over the airlines. He spoiled the whole airlines. He is not efficient of managing. So they are interested in the success or failure. Now, just example, Some of the takeovers is to destroy the company because they are already running another company. It may not be out of context to tell here. Some 20-25 years back, Reliance tried to take over L&T. L&T was an absolute professional company. If you go through the records, you'll find out. Reliance, those days, Jhunjhunwala was holding some 10% shares. It is sold in the market. If you want to do corporate governance, you do it in L&T. Reliance, Dhirubhai Ambani, eyes fell on L&T some 30 years back. He started purchasing the shares in the market. Those days, no SEBI and all that. When he purchased some 15-20% of the shares, he told his intention to Bombay Stock Exchange to take over the management. In fact, he appointed Mukesh and Anil on the board. Next day, he is likely to come as chairman managing director. That night, the ministry had some intelligence information that when Reliance takes over L&T, 3-4 bad things can happen. One, they may send some 10,000 employees home. Two, Reliance has a record of tax planning. I'm not saying tax evasion. So once Reliance takes over, income tax and other taxes will come down. Third, Reliance had a textile manufacturing division, L&T also has. And the quality of textile manufacturing machines division was very good and prices was low. Once the takeover comes, textile industry will suffer because Reliance will try to improve the price and eliminate the competition. So there could be various reasons. Something wrong is going on. Who is the person financially interested in the success or failure? Who is the person controlling the company? Who is having that remote? Shareholders are dummy. Finance, they are dummy. Who has got the beneficial interest? Who are the beneficial owners? I was telling significant beneficial owner. On record, someone is company. For this, they can do the investigation. And once they do this investigation, come on, what they will do, see here, you have to understand one point. When they do this investigation, after all, they will come and they will not finish the investigation 1 or 2 days. They'll come on Friday and the company will take time for 2-3 days and manipulate all the records. And by the time they come on, they will say everything is fine. The central government knows this. So what they do, they go to the tribunal and to find out the relevant facts, securities to be issued and not issued, certain restrictions should be imposed. They'll face the restriction. They will say, last 6 months, whatever right shares you are given, they will cancel it. Dividends, whatever you given, they will cancel it. To know the true position, they have done all this as a cover-up. Those things can also be cancelled, otherwise punishable. Freezing of assets, 221 section they have added. When any investigation is going on or oppression goes on or any creditor, he has a fear that the assets of the company is likely to be transferred or believed, then the tribunal can give an order freezing all the assets, records and all that. Then protection of employees. Protection of employees. Investigation is over. MD came to the office. He called the finance manager. I understand you fully cooperated with the investigators? Yes, sir. I see. So investigators were very happy. Yes, sir. They said they'll send a certificate. Bloody fellow, now get lost. You cannot touch any employee because they are cooperated for the investigation. Dismissal, discharge, reduction in rank. If you want to touch them, tribunal approval is required. If the tribunal does not respond, then you may take action. Then appeals can go to appellate tribunal. The decision of the appellate tribunal is final. Then voluntary winding up also cannot stop your investigation. There's one section. Then savings for legal advisors and bankers. This professional immunity is not available for chartered accountants, company secretaries. All these investigators, this immunity is available only for legal advisors and bankers. The legal advisor has to disclose only the name and address of the client. Whatever communication he need not disclose. Similarly, the banker need not disclose the banking transactions. So the savings is not available for us. You have to go and report to them. Then investigation of foreign companies, same provisions will apply. Penalty for false statement mutilation, very severe penalty. They have said it will be treated as a fraud. So thank you very much. We had a wonderful session. So as already told, tomorrow will be the last session, wherein I'll cover the operation mismanagement, compromise arrangement, winding up, special courts, and the mediation panel and things like that. I will be going overall only because on daily basis, it doesn't happen, operation mismanagement, winding up and all. So the next 2 hours should be sufficient to do full justice to the topic. Thank you very much.
Thank you, sir. Thank you very much for a non-stop Rajdhani Express that is going on. So, as you also informed about the tomorrow's session, we'll be following up tomorrow sharp by 6 o'clock. Thank you, sir. Thank you very much. And we'll call it for the day. Good night.
Thank you, sir. Thank you.